Good evening and welcome to today's financial market update. Let us begin with a quick recap of Friday's trading session on Wall Street. The three major indices closed nearly flat, with the Nasdaq finishing at 25,709.43, the S&P 500 at 7,383.74, and the Dow Jones at 50,866.78. However, pre-market futures are pointing higher across the board. Nasdaq futures rose to 29,026.50, S&P futures to 7,400.50, and Dow futures to 50,936.00, signaling a potential risk on rebound when markets open on Monday. There were no significant individual stock movers yesterday. Nvidia closed at $205.10, Tesla at $391, with no dramatic swings. The market is essentially waiting for the next catalyst. Now let us turn to the global macro picture. The 10-year U.S. Treasury yield remains elevated at 4.54%. May non-farm payrolls added 278,000 jobs, far exceeding expectations, and wage growth accelerated. This has further pushed back market expectations for a Federal Reserve rate cut, sending a clear signal of tightening liquidity. The VIX Volatility Index stands at 21.51, within the normal range of 15 to 25, but near the upper end. This suggests caution rather than panic. The US dollar index strengthened to 100.07, reflecting the resilience of the US economy, but it is also putting pressure on capital outflows from emerging markets. West Texas Intermediate crude oil is trading at $90.54 per barrel, supported by supply-side disruptions. Spot gold is at $4,365.30, balancing between inflation concerns and a strong dollar, but still near historic highs. The big picture here is clear: global markets are showing severe divergence. U.S. assets are experiencing a risk-on sentiment, while Chinese assets are under pressure from tariff escalations and technology restrictions, shifting into a clear risk-off mode. On the renminbi and external environment for Chinese assets, the onshore dollar-yuan rate is at 6.7660, and the offshore rate is at 6.7888. The currency remains stable and does not have the basis for a sharp depreciation. However, a stronger dollar is putting downward pressure on foreign capital flows into shares. Over the past week, northbound capital has already seen net outflows. Over the weekend, U.S.-China trade tensions escalated significantly. The U.S. Trade Representative announced a tariff increase to 50% on Chinese medical equipment and pharmaceuticals effective July 1. The Bank for International Settlements plans to add 14 Chinese AI companies to its entity list, restricting access to EDA tools and chip technology. The European Union will impose provisional anti-subsidy duties of 17 to 36% on Chinese electric vehicles starting July 4. On a slightly more positive note, the U.S.-China Economic and Security Review Commission has recommended narrowing the scope of AI chip export controls to only high-end chips. But overall, the pressure remains heavy. Our expectation for today's A-share market open is a lower start, as the weekend's negative news is being digested. The Chi-Next board may continue to face headwinds. Looking specifically at the A-share market today, the Shanghai Composite closed last Friday at 4,027.74, down 0.74%. The Chi-Next board dropped sharply by 3.2% to 3,957.93. Under the impact of tariff increases and the entity list, the Shanghai Composite is likely to trade with a downward bias today, and the Chi-Next board faces further downside risk. In terms of sector rotation, gold and precious metals, with spot gold at $4,365, are likely to attract safe haven demand. Utilities, especially the nuclear power segment, with their defensive characteristics, could become a capital haven. On the other hand, sectors such as electric vehicles, AI chips, autonomous driving, and medical equipment should be avoided as the negative news has not been fully priced in. As for northbound capital, with a stronger dollar and escalating technology restrictions, net outflows are highly probable today. Let me leave you with a clear and concise takeaway. The divergence in US-China policy is intensifying. For shares, defense is the name of the game. Gold and utilities are your short-term safe havens. Our probability assessment for today is 20% chance of an up move, 35% chance of a sideways move, and 45% chance of a down move.